Hello and welcome to Pro Trader Strategies Market Commentary for Friday, September the 21st. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get on with some economic data across the pond. We got some flash PMI estimates, and what those PMI estimates, we're going to get manufacturing and services, but PMI is Purchasing Managers Index. Anything above 50 is expansion in the economy. Anything below 50 is contraction. All right, so let's get it on with French flash manufacturing PMI came in at 52.5, expected to be 53.3, lower than expected. Not good, but it is expansion nonetheless. Then we got French service PMI, flash service PMI, came in at 54.3, expected to be 55.2, again lower than expected, which is going to be a reoccurring theme here. German flash manufacturing PMI came in at 53.7, expected to be 55.1, and then flash manufacturing PMI for the greater European region came in at 53.3, expected to be 54.4. German flash services PMI, the only one that actually beat on the headline number, it came out at 56.5, expected to be 55.1. And then finally, flash services PMI for the greater European region came in at 54.7, in line with expectations. And then finally, coming back over here to the United States, we got our flash manufacturing PMI. Again, we don't here in the United States really hold a lot of credence with this economic data point. As a matter of fact, when I was on the floor, I didn't even know we had a flash manufacturing PMI here in the United States, because all we look for is the ISM. Having said that, ours came in at 55.6, expected to be 55.1, and then the services PMI came in at 52.3, expected to be 54.5. So pretty much a miss on all of these across the boards. Then we've got crude oil trying to move higher today, right now up about 2 cents on the day. It did have a nice big rally early on this morning and overnight, but we have since seen that euphoria kind of get lifted, especially with these low economic data points. You know, it's still expansion in the economy, but we're just not seeing that really robust economy, okay? Which is good in this type of situation as far as I'm concerned, as long as we continue to ratchet up and keeps those bubbles from happening. And I think that's what we're seeing right now. On to gold futures. Gold coming off quite dramatically, getting a little bit of bounce off of some of this economic data, but it's just really stuck in the mud right between the 32 Fibonacci and the 23 Fibonacci here. So as long as they stay above 1200, the bulls are going to be happy right now, I think. Bitcoin moving higher by a couple hundred points today, as this whole Bitcoin cannabis stock kind of thing is back and forth. I think the millennials are loving this. They pull their money out of Bitcoin, which may be why Bitcoin's been lacking in volume, and because CNBC and some other mainstream medias are pushing these cannabis stocks, they are flying high. So today we're seeing some of those pull back in the cannabis stocks, and now Bitcoin coming up. I don't know. Are they a flight to quality in terms of millennials? I don't know, but it's pushing higher today on a little bit more volume than what we've seen recently. All right, bonds are holding their own down here at these levels. Yesterday, we got a couple of bottom dojis here. I think that this is well overdone to the downside. I even tweeted out yesterday, the Fed is destined to increase interest rates, which is what they always do. They always have a tendency to go way too far and have to back off. And I think that this is probably going to be a case, because they keep talking about raising interest rates. And at this point in time, I think there needs to be a pause. So I think that they are going to overdo it again. VIX coming off. We're still in double digits, but it is coming off. Dow Jones Industrial Average making an all-time new historical high again today, up 70 points and above the Fibonacci extension and the original Fibonacci I had set up for the basically the 52 week for last year. to this high. We've broken above that, obviously. As you can see, there's a new high here. But the thing to note here is that is going to act as support now. So keep an eye on that. Finished like this, it could look a little toppy. Then we've got the NASDAQ off a little bit by about 16 points as we're getting a little bit of a mixed bag with the overall equities. E-mini S&Ps, we could call it unchanged, but this is what I'm talking about, looking a little toppy on a Friday. I don't know that it's going to end up like this because usually Fridays, slow volume, we get that low volume rally happening, and I think we might be able to see that happen again today. All right, this is the E-mini S&Ps on the 30-minute chart. Each candle is a 30-minute. Each blue section is a day and overnight session, pre-session. As you can see, overnight inventory did get long. They flushed themselves out. And then we come in today into the morning. Everybody's pretty happy. It's a Friday. The market starts rallying. And then we get this data. And the market really is not loving it. So that's part of that catalyst for the sell-off across the pond and here in the United States. Across the pond, we got bad data, sold off, got overnight inventory short. The boys in the day session flush them out and then get our data point and realize, oh, those guys might have been right. All right, so let's talk about a couple of trades that I've done. Amazon, I tweeted this out yesterday that I had gotten out of my Amazon trade. Remember, I was short puts in here. So the market rallying yesterday helped me out, right? Well, middle of the day, probably around actually, I think it was probably around 11 o'clock Eastern, maybe 12 o'clock Eastern, we saw a bit of a pullback in Amazon. I decided I was too close to the 50% of max profit. I ended up chasing it maybe a little too far, but I ended up getting filled nonetheless. And in Amazon, I had on the October, sold the 1,725 puts originally for $17.80. Bought those back for $9.75. So a nice little profit there. Not quite the 50% of max profit or 50% of that max profit that I was generally looking for. I was working a bid for it. Got really close. Kind of waited it out a little too long and the market started moving away, and I decided I did not want another Apple trade where it goes back to unchanged. I needed to get out of that rather quickly because that Apple trade was a nice winner, and now we are back to about unchanged. All right, so a couple of trades that we looked at and vetted yesterday in the webinar for the long puts, setting it up in the right environment and all of those things. We started seeing some patterns that looked like it might be a good setup for a long put strategy. Following along with my rules for that low implied volatility, we've got a little bit of a toppy pattern here. It looks to me like a good opportunity to get into this sector with the John Deere, Caterpillar, and a few of the other names that go along with them. I'm just looking at Caterpillar and Deere right now. Working order for Deere, I'm trying to do the December 150 puts in there. I'm about a nickel or a dime away at any given time, so I'm trying to get those. But in the Caterpillar for the downside, I'm looking at those same October, or sorry, no, I'm not. I'm looking at the November 155 puts in Caterpillar that I paid $5.95 for, so almost $6. It did look a little bit better. The chart looked almost like the Caterpillar trade when I put this trade on. Looking for a bit of a follow through and a confirmation here, but not quite getting there just yet. Then we've got Anadark Petroleum. Ticker symbol is APC. This is one that one of our participants in that webinar came up with. Said, hey, you know, this guy's got low volatility. It looks like it's getting a little confirmation of a top. Today's movement not looking so great, but I'm still with this to the downside. So I went in the November again and bought the 62.5 puts in there for $1.99. So maybe that's $1.90. Yeah, $1.99 on that one. So looking for a pullback in this as well. So trying to add some short deltas. Remember, I talked about this yesterday. I was getting really long deltas. That's one of the reasons why I really wanted to cover that Amazon trade as well, because that would lighten up some of my negative deltas. Sorry about the dogs there. And adding some of these long deltas by buying the puts is also an adjustment to that overall portfolio delta. All right. So check that out. Go check out the webinar I did yesterday on long puts. It's a really good one. I think you guys will take something away from it, even if you've been a long time options trader. Also, check me out on Twitter at Wolfman's blog, and give me a thumbs up, thumbs down on this video. If it's a thumbs down, tell me what you didn't like about it. If you give me a thumbs up, also give me a comment of what you like and what you would want to see further in future videos. All right, so if you can't take that, take it easy.